Good morning, everyone. I hope you're all doing well and you're all very welcome to our midweek market update here with the Alpha Capital Group. So, of course, today we will be going through some of the key events for the rest of the week. Of course, we will be recapping on some of the volatility last night off the back of this, I suppose, escalation in tensions, as you will, between Poland and Russia, of course, with the bomb landing in Poland, killing two people, and of course the effect that's having on the geopolitical tensions as well. So I suppose to begin very quickly, if we recap on some of the data yesterday, we had the PPI figures yesterday in the US. They did come out less than expected. They're following through that CPI information that came out last week of obviously lower than expected inflation levels. So that's obviously a positive thing. We did see initial buying in the stock markets, but of course last night, as the news broke out between Russia and Poland, that did undo a lot of the selling bias. And of course, we'll be taking a look at the indices now in a moment or so. Overnight, we did have PPIs out in New Zealand again, marginally coming in as expected. And as well with that, we've also had some important figures out of Japan as well, with GDP coming in pretty much as expected as well. So we're not seeing too much in terms of overnight movements. We did see a bit of volatility this morning, particularly off the back of the CPI in the UK back home here. CPI prints has come out way higher than expected, 11.1%. So 10.1% was the previous, 10.7 was the consensus, and 11.1 was the actual. So you're still seeing here, even though what's happening in the US with weaker than expected inflation, we are still seeing the UK inflation continue to rise very significantly. And of course, excuse me, we are obviously seeing that now above the 11% level. Now with that as well, we have seen other figures come out relatively high. So, for example, the retail price index, so the price of retail products, has continued to rise. That's quite a sharp increase from 12.6 to 14.2. And of course, if you're looking at the PPI month-on-month figures, 0.6 as well. So there's quite a mix of figures this morning out of the UK, but broadly speaking, doesn't necessarily bode well for the idea of stable prices within the economy. Now, of course, if you backtrack to the recent Bank of England interest rate meeting, you will know that Ben Broadbent and Governor Bailey has talked or quoted the idea of a potential 2-year recession. So, of course, that's going to very much impact on the state of the economy as the state of affairs continues to develop in the UK from an economic perspective as well into 2023. So it's important to be aware of that effect in the coming months as well as things develop. So of course this afternoon we do also have we've kind of a number of information out in Europe as well. We have stuff here in Ireland, we've stuff in Russia central bank meeting. So we've got different figures coming out in Europe, but the big thing today will very much be at 1:30. Now at 1:30 p.m. we have firstly we have US retail sales figures, so export price index, retail sales figures from the US. So of course we're looking to see, right, given that we've fairly decent growth last quarter in relevance to recent statistics, given that the stability in the pricing's coming down, are we going to see a little bit of a bounce back in the retail sales? And that'll be worth keeping an eye on, because of course if the retail sales starts to turn lower and CPI figures in Canada comes up higher than expected, like with that in the UK today, it's going to put pressure on these markets again after what's been a very good kind of 2 to 3 week of equity performance in these markets as well. All right. Now, that then brings us to this evening, where we have a raft of different speakers. So, of course, this evening, you will see that we have Waller speaking. We have President Lagarde speaking. We have TC net flows as well out later tonight in the US, or TIC flows, should I say. So, obviously, we're looking at all of these different elements collectively. And, of course, that brings us then into tomorrow. Okay, now tomorrow we do have data overnight in Australia tonight. We do have data out in China. And of course, tomorrow we will be looking at the CPI prices in Europe, so both in terms of the harmonized consumer price index, but also the CPI levels as well. So we're going to be watching that very closely. And that then really brings us to the back end of the week, where, as we said here, there's the harmonized consumer prices. And we also have then the Philly Fed survey and index. So that's going to be an interesting one from an output perspective from a US-based economy as well. So worth keeping an eye on all of these different narratives. We've got a lot of different figures coming out. Not what you call massive information, but collectively, if they all start to turn the same direction, they could have a fairly consequential effect in the markets as well. And it's important to be aware of that broadly as well. All right, so that's kind of a quick preview. Now, of course, we will be back on Friday kind of synopsizing the data that over the last few days and how the markets has developed. But obviously, first things first, let's take a look at some charts and reflect some of the movements that we've seen in the early parts of this week, particularly in the offset of the tensions last night between Russia and Poland. So if we look at the DXY, first and foremost, you can see here very, very clearly that the DXY did get initial bounce off the liquidity level, that daily order block level at 106.35. You can actually see that there very, very clearly. However, we have seen a little bit of pressure coming in again. So some of the indices, Trump's announcement last night has obviously kind of helped to spurn the markets up a little bit. And of course, that's feeding into, again, a slightly weaker dollar perspective. So when you look at the DXY perspective, you can see how it's had this meandering up and down phase of corrective movement. Then we have this very, very sharp selling imbalance. So the price action moving very, very swiftly in the same direction without any sort of pullback or move against it. And of course, now the price action is becoming very flagging like. So we have short-term lows, pullbacks, new lows again, new pullbacks. So we're looking to see if there's any sort of reaction. Now, I know this daily level extends at 106.35, where we've just alluded to, but there is the potential for it to come slightly weaker and even look at the elements of a potential move into 105. So this 105, 106 handle exclusively becomes the broader echelon region to be watching very, very closely this week to see if there is any sort of reaction, because if there is, the likelihood is it's probably going to come off of this level. So we're obviously waiting to see. Now, of course, we're really looking for clarity here to see, does this level actually hold up? Because on the daily time frame, as you can see, we have a fairly deep and significant run up. So of course, we are starting to see a bit of a correction in the trends. That'll obviously be interesting from a risk on, risk off scenario in the stock markets, and seeing obviously with the weaker dollar, does that assimilate back into higher than performing stock indices? And that's obviously something we're going to be watching very, very closely as well. All right. Now, first things first, as we look at, before we look at the FX markets, we're obviously going to be looking at the treasuries as well. Now, when we look at the treasuries, we're still seeing the treasuries sell off. So that's obviously boding well with this idea of weaker dollar, risk orientation into the markets, indices doing quite well. We're seeing the yield sell off. We're seeing the dollar weaken. So generally speaking, everything's looking quite rosy as things currently stand. Now, if we look at the price action in a little bit more of a detail, as you can see on the daily time frame, we can see how the yield story has obviously topped out up here around 4.2 to 4.25% and is correcting back into this 3.8% handle where we're currently seeing. And of course, if you look at it on the shorter time frames, you can see how the yield scenario is actually playing very, very nicely back in, and there is the potential for this move back into 3.65% down here. So worth keeping an eye on that to see, does that level continue to play out. Now, with that as well, obviously moving across to the FX markets, I suppose firstly and foremost is to determine how is the markets looking after our call on Monday evening. So we've seen Tuesday, obviously Tuesday yesterday, very, very volatile. Okay, we had that initial move higher off the PPIs, obviously the pullback, the liquidity, nice move back into this level around 103. And we can see structurally speaking how the 103 handle has held up exceptionally well in the last 24 hours or so. Into last night's close, we got that rally, price action stabilized, and we actually have seen the markets move slightly higher. So now it's a case of, are we going to try and take out these local highs up here at 104.50? And if so, then you're really looking at this bullish trend continuing with the idea that, right, if we can get a closure above, let's say 104.50, 104.80 today, that's really given the euro dollar another bullish engulfing of the wick that was formed yesterday. And it does put the pressure again back on the dollar as we're seeing this corrective movement in the euro against the dollar. So we know euro dollar are generally in negatively correlated. So when the dollar's strong, the euro is weak, and vice versa. So of course, then we can apply that logic. When you see the DXY weakening, you can see obviously the potential opportunity for euro dollar to continue trending higher. Now, of course, we have this area here, liquidity around 106, or more poignantly between 105 and 106. And we also have another level up here around 107 as well. So worth keeping an eye on that. Now in cable, I suppose first things first, when we look at cable, just going to go full screen for a second. You can see here that this bullish trend is still continuing to play out. So the higher highs, higher lows we talked about last week, and of course on Monday, we've had that very, very strong move yesterday. Price action has now held above this 118.55 level. So this was an area of interest where we saw a fake break. We saw the sell-off occurring. We saw that bearish trend play out. But now you can see how the price action's broken through. We've got that initial move into this 120 handle here, up here. Very nice price action structural move. And now we're seeing the price action hold very firmly above this 1850 level per se. So we're looking to see, is there any sort of reaction from 1850? Because when you look at the 1 hour chart and isolate the price action, you can see how aggressive the moves have been in the last day or so. You can see that strong move yesterday off the PPI. The figures, obviously the movement last night undoing that with a little bit of short-term dollar strength. And now we're looking to see if there's any sort of taking home or taking of liquidity to the upside if the order flow is going to continue trending that way. So I suppose 1850 is approximate region here from a higher time frame perspective, but also we're watching the short-term liquidity as well, because on the 15-minute charts we've had a lot of data this morning and we're very much back and forth topsy-turvy. So you can see here at 7 o'clock, decent sell-off into the 7 p.m. data print. 7 to 8 we've rallied back and now we're kind of stuck in a range. So obviously worth seeing how does the market develop in line with that as well. All right, and then that obviously then brings us to the Aussie. Okay, we're looking at the Aussie, that strong Aussie movement, and we talked about it Monday into 67. We've broken through 67 now, and the price actions continue to trend higher. And this idea of 68, 50, 69, we've got a daily order block here at 68.28, but we also have this area of interest here around 69 as well. So it wouldn't be surprising now to see the price action come back up and try and test this liquidity level up here at 69. Now we are still trending higher, which is a positive. So we're just waiting to see if there's any sort of reaction from the 69 level, because as you can see here now at this moment in time, the order flow is incredibly bullish. Markets are still trending higher, creating those short-term highs and short-term lows. And we saw that again with the Aussie last night, that very, very clear impulse off of the data yesterday. And then, of course, that little bit of a pullback into last night's close. However, markets are still holding relatively firm. And that is obviously something to keep an eye out on over the next couple of days or so. Then with that aside, moving across the dollar CAD, just to round off the FX pairs, the idea we mentioned last week, this idea of potential move into 132.50 has now been completed, as we saw the early parts of this week. And now it becomes a case of, does this area here at 132.50 hold? Because if it doesn't, and we see that further dollar weakness, we should really be looking at dollar CAD to continue selling off and come back into some of these liquidity levels down here. You can see the order block levels here. You can even see the last one here between kind of 130.50 and 130. So that really becomes the area of interest, that if the price action continues selling off, the likelihood is that there's a strong bias that we're going to do all of, or we're going to undo all of this bullish bias that we saw here from the middle of September into the middle of October. And we're going to return back into this kind of 130, 131 level. Now, of course, when you look at the broader perspective, you can actually see how well that's been playing out, because we've got that rejection of the weekly area up here. Very, very clear rejection, just shy of 140. The price actions now come back through. So even though we've rejected this order block here, we're now coming back into potentially undo some of these lower time frame structures here between, as I said, between 130 and 131. So 130.50 becomes a very, very nice level to look at this week to see if there's any sort of reaction. And particularly on the 4 hour as well, you can see here that the 130 handle does become a very, very interesting level to see. Does the markets come all the way back to mitigate this initial impulse and, of course, the sustained trend that we saw through the middle of October? So that then brings us to gold. So gold hasn't really done much in comparison to what we talked about on Monday. We're still seeing the price action trend higher. There was a bit of volatility on Monday with a little bit of a rejection. Tuesday has tried to tick higher. Wednesday, we're trying to follow that through. We still have this daily 4 hour level here between 1790 and 1800. And I was looking for this to continually being tested. Now, when you look at the price action, structurally speaking, on the 4 hour, you can see how the order flow is now becoming a little flagging like structure. So you can see here the higher highs, higher lows, the higher highs, the higher lows. The price action is still grinding higher. So you're looking to see if there's any sort of reaction up here, because that's obviously phase one. That's phase two with a couple of short-term impulses. And then we're looking to see if there's that third impulse back in to mitigate this daily 4 hour level region here up here, as I said, between $17.90 and $1,800 per ounce on gold. So not much else to really say on that one. Now, as we move across to the indices, I suppose structurally speaking, where we were on Monday, price action has continued to be quite choppy. So we saw that flagging structure Monday, yesterday, that PPI move. So this is something you're going to see yesterday across the board at 130, that higher than expected PPI move. 130 saw the indices make new short-term highs. Now, of course, the correction yesterday very much undone that, came back to this area here, 39.60. And you'll also see on the 15-minute chart, for those who are short-term traders, you can actually see how we got a double mitigation of the area here, 39.60. So you can see here we've got the run-up, we've got another further run-up, mitigation, price actions come all the way up again off the PPIs, and then of course the catalyst comes back down, mitigates it. Of course, there's going to be bearish news to mitigate the order block, which did so very, very cleanly. And since then, the markets have kind of went a little bit sideways, albeit to the upside as well. So we're looking to see if there's a breakthrough at 4,000 level. We did try and break through 4,000 last night at 4,010. This area of interest here where the cursor is currently sitting at, but ultimately we failed. So if you're looking for risk orientation to continue, stock markets to continue moving higher, dollar to continue moving weaker, I think your mandates is obviously there, seeing the DXY moving lower consistently, and also looking to see, can the price action here in the SPX S&P 500 break through this 4,010 level and continue it to the upside, because that means that that sentiment is very much looking likely that it wants to continue, and of course being able to reflect that back into the price action. And that goes across the board. So Nasdaq now, as we look at the price action now, structurally speaking, got very, very flagging like yesterday, got that move. We got that double tap pullback all the way back into the 4-hour move. Of course, if you look at the 1-hour chart as well, you will see the 1-hour mitigation. Price action comes all the way back down. If I just get my drawn tools, comes all the way back down, mitigates this level here to the T. And of course, the markets are now sitting firmly above that. So this area here at 11.8 is holding very, very nicely into this morning. So of course, 11.8, 11.7 is obviously the medium-term area of interest, but from a short-term perspective, 11.8 is holding nicely. So we're looking to see if there's any sort of continuation beyond that. Can we start to see what we saw in the FTSE last week, those kind of higher highs, short-term higher lows, elevation to the upside, continue flagging back against the higher time frame trend, which, as we know, is still looking to mitigate these daily moves up here at 12,550, 12,600. And of course, there's even a secondary level further up at 12,950. So that's going to be the interesting element this week, is to see, can the indices, can the stock markets continue churning higher? Because if so, the Nasdaq is still plenty to run against what has been a very, very laggard performance through September. And of course, then you're looking at that via the Dow Jones. You can see how now the Dow Jones is becoming a little bit more consolidationary. So of course, if you look at it now, I'm just going to remove this for a second. You can see here, obviously off the daily level, very, very strong Dow Jones reactions off the daily level. 3 daily wick rejections now have been confirmed. We're now trying to move higher again today. Now, when you look at the 4-hour chart, you can see here the 3 peaks. Price action is forming consolidation. You can see how the price action's broken through, and now we're flagging back into this 4-hour structure here. So 33,650 is going to be an interesting level. But for those who trade maybe shorter time frames, it's actually worth seeing, well, how does the price action develop in this region here, broadly speaking? If you look at your short-term fibs structure from high to low, you can see how the price action looks like it might try and make a little bit of a higher move. So rather than selling specifically off the daily, it might be worth cluing into the 1-hour time frames, give yourself a little bit more of a barometer of interest to look at and see if there's any sort of reaction here between 33,750 and 33,850. Okay, so the price action's broken through. We've taken its short-term lows both here and here. Now we're looking to see if there's any sort of flag back and if there's any sort of reaction here. Otherwise, if we wait and the price action ultimately tries to break through, then you've got the possibility of it then taking highs. So then what's happened, we've taken the lows, we've taken the highs, and it's elevating the possibility for this to continue moving higher. So that's obviously something to worth keeping an eye out on there on Dow Jones over the course of the afternoon. Now, moving across to the FTSE has just continued to consolidate around the 7,400 level. So for those of you who trade it, you will see earlier in the week we talked about this daily order block level. Okay, I'm just going to move that out of the way. Go full screen for a second. You can see the daily order block level way up here. Okay, a clear reaction from 74.10, multiple daily reactions as well, or daily rejections. If you look at the 4-hour price action, very consolidated, right? So we've got that initial break off to the upside, we've come back down, we've flagged up. We would have liked to see the price action break through the structured lows at 7,300 last night to allow that continuated sell-off back into kind of 72, 7,100 levels. However, of course, with the figures this morning, the markets continue to accumulate, the indices holding up quite relatively well. the continuation in dollar weakness, we're still seeing the FTSE hold up very well. Now, for those of you who don't know, the FTSE is very much tied to the what would be said to be an inflationary index. So what does that mean? Well, it actually tends to mean that the FTSE tends to perform quite well during inflationary times because of the assets that's contained within the FTSE index itself. And of course, if you don't know the assets within the FTSE index, feel free to Google them. If you go into Market Screener and go to Market Components for the FTSE 100 index, you will see all of the different stocks contained within that index as well. All right. So worth keeping an eye out on that one, structurally speaking. Still kind of navigating around 74, still nothing really happening there yet. If you look at the short-term perspective, price action is still kind of in accumulation. So we did obviously close lower last night, but we have seen that very, very strong recovery this morning and back into the 73.80, 7400 level. And that's where price action is currently set at today. So where does that leave us then? That leaves us then finishing off with the DAX. So if you're looking at the DAX structure, I suppose firstly and foremost, go to the higher time frame for a second. This idea of 14,500, 550 daily structure that we talked about on Monday hasn't obviously been mitigated yet. We've seen multiple daily reactions and rejections as the price action starting to consolidate. So of course, we're seeing now the Nasdaq outperform the Dow Jones because the Nasdaq performs better when there's a higher risk orientation in the market. So the Dow Jones performed very, very well over the last weeks because the Nasdaq was doing so poorly. Okay, so it's important to understand the relationship between the different indices as well. Now, when I look at the DAX this morning, I can see this kind of flag higher into this consolidation. We've got the clear break of structure yesterday, breaking kind of short-term lows. We've flagged all the way back into this area of interest here. And of course, on the 1 hour structure, you'll actually see short-term bottoms, flags back into the order block. And there was a clear initial rejection here this morning around 14,365. So it'll be interesting to see if there's any sort of reaction off of that. Is there any sort of continuated sell-off? Of course, now, I suppose the main thing is, can the price action break through these short-term lows, which as it stands, just slightly over 14,200, so 14,230, back to 14,200. If we're taking out this order flow, we should be now looking for that systemic change in trending action where we see lows, we see pullbacks, we see new lows, etc. And then you'd be looking for that kind of shift in sentiment accordingly. So that's obviously something to watch there on the DAX. And of course, with the Euro Stoxx, a very, very similar movement. So Euro Stoxx again, higher time frame, not something we've looked at much over recent weeks. However, you can see how well it's been performing. It took out the August highs, it's taken out the May highs. Absolutely incredible run up in the Euro Stoxx in comparison. It's come all the way back up, and you can actually see how it's mitigated this level here at 39.32. Now, for those of you who don't know, 39.32 was this 4 hour level. Okay, and I'm just going to remove the higher one just for a second because that's a duplicate. You can see how this 4 hour order block has been initially rejected at 39.32. You can see it there very, very clearly. You can see on the shorter time frames, if you look at the structure, price actions flagging higher. One last impulse creates that short-term top, comes back down, breaks the short-term structure here. Okay, if you're looking at short-term structure here being broken, like so. So you can see that here, that kind of short-term bottom. Price action flags back up into the liquidity area and is now seeing a fairly nice rejection, solid rejection here from 39.10, 3900 to 39.20. So that is going to be the idea now, is can we see the markets ultimately sell off from this region and undo all of this bullish bias that we saw, let's say, for the last month or so, because we've gone from 3,200 all the way up to 3,900. That's an incredible move. That's a 25% move in the European indices over, let's say, the last month or so, which is an incredible recovery. But of course, you could see how very, very quickly some of those movements can become eroded with the sharp order flow and price action. So from that perspective, see if there's a clear rejection today. If there is, we could very easily see Euro Stoxx come back to a more modest kind of 3,700 level. You've also got another area here at 3,600 as well. So worth keeping an eye to see if there's any sort of pullback against what's been very, very sharp order flow as well. All right, so everyone, that's where we are for today's market update. So of course, feel free to join our community. We are doing some giveaways now for November. So there's a free computer to be won as well, Apple computer device to be won. We are doing competitions for the FIFA World Cup as well. So we're doing as many fun things as we can possibly think of to, I suppose, engage the community, keep everyone happy. And of course, we will obviously be looking at the 12 days of Christmas as well. And then we're rolling into the Christmas period. So we will be unveiling more about that in the coming days and weeks as well. All right. So that's where we are for today, everyone. I hope you have a great day. There's a lot of data coming out, as I said, over the next kind of 2 to 3 days or so. So of course, trade safe, be well, and we'll see you all on Friday for a weekly market overview.